Dear students, I am Soumya HK, Assistant Professor, Department of Economics, Government First Grade College, Siddhagatte. Today, we will discuss about Foreign Exchange Department of a bank, organization and functions, which is prescribed for second BCom students of Mangalore University for the paper International Trade and Finance Part 2. First of all, we have to understand the meaning of foreign exchange department of a bank. The foreign exchange department of a bank is also known as International Banking Division. It is one of the important departments of a bank operating in international market. All banks, private or public, have foreign exchange departments due to necessity. A wide variety of services are rendered by a foreign exchange department. Therefore, we can conclude that foreign exchange department of a bank is one of the various departments working under a particular bank in the foreign exchange market. All the banks, whether private or public, scheduled or non-scheduled banks, must have foreign exchange departments due to the necessity of international trade. Therefore, they are rendering various type of services to its customers. The foreign exchange department of a bank performs foreign exchange operations as well as transactions. The main function of a foreign exchange department is to handle foreign inward remittances as well as outward remittances and buying and selling of foreign currencies, handling and forwarding of import and export documents, and giving the consultancy services to importers and exporters. Any foreign currency, travelers' checks, letters of credit, and bills of exchange are processed by this department. However, foreign exchange department of a bank plays very important role in country's economic growth because international business is highly dependent on foreign exchange department of a bank. Therefore, foreign exchange department of a bank performs variety of services ranging from foreign exchange operations to foreign exchange transactions. They will deal with foreign inward and outward remittances, buying and selling of foreign currencies, handling of import and export documents, and giving consultancy services to its importers and exporters. Apart from this, it also performs foreign currency, travelers' checks, letters of credit, and bills of exchange transactions. Therefore, the role of foreign exchange department of a bank increased because of the increased importance for international trade for the betterment of economic growth of the country concerned. We can move to the Indian scenario of foreign exchange department of a bank. In India, the banks doing foreign exchange business are issued a license to this effect by the Reserve Bank of India under Foreign Exchange Regulation Act 1973. No bank not having such a license to deal in foreign exchange can handle foreign exchange operations. Besides, authorized dealers' licenses are also issued to the dealers with limited powers to change foreign currency notes, coins, and travelers' checks. Such licenses are known as authorized money changers. In India, the banks are giving licenses to deal with foreign exchange transactions by the Reserve Bank of India under the FERA Act. No bank is allowed to handle foreign exchange operations without licenses. Apart from authorized dealers in foreign exchange transactions like Foreign Exchange Department of a bank, licenses also can be issued to the dealers with limited powers to change the foreign currency notes, coins and travelers' checks. They are called authorized money changers. Now we shall move to the next concept, organization structure. The foreign exchange department of a medium or large sized bank can be divided into various departments and sections. Such departments are looked after by a senior person not lower than the category of branch manager, having both administrative and operational know-how as well as discretionary powers of advances required from time to time by the clients. The foreign exchange department is divided into number of sections. A particular section can be subdivided into subsection with specific duties allotted. The sections in foreign exchange department can be broadly stated as: first one, dealers section; second one, foreign remittances section; third one, import section; fourth one, export section; last one, statistics section. The organization can be explained with the help of this chart. So, we shall move on the first section of the foreign exchange department of a bank. Dealer section is the nerve of foreign exchange department, as the exchange rates are computed and advised by this section. This section is headed by an officer who is called a dealer. The exchange rates of various currencies are computed on the basis of certain fixed principles, which may be either market quotations or any such approved channel. This department calculates and advised both the ready rates as well as forward rates. Besides, it also looks after the foreign currency accounts of the bank and supervises the balancing position in foreign currency accounts maintained abroad. It also controls the exchange position of the department and calculates and tabulates the statistical data required by the principal office. The primary responsibility of dealer section is that it has to calculate the exchange rates. The exchange rate is calculated on the basis of exchange quotation or approved channel. It calculates both ready rates and forward rates. This section can be further subdivided into the following subsections: rate calculation and advising, forward exchange contracts, foreign currency accounts, exchange position and controls, and finally reconciliation of foreign currency accounts. Second one, foreign remittances section. The foreign remittances section deals with the inward and outward remittances received in the country and sent outside, both on behalf of the transactions taken up by residents and non-residents. Foreign remittances are carried out in the form of cable transfers, mail transfers, demand drafts, traveler checks, payment instructions by the letters. All these forms are widely used both for inward remittances as well as outward remittances. The officer of this particular department has to be quite well versed with various regulations in force from time to time and the amendments thereto. The remittances are converted into local currency in case of inward remittances and in foreign currency in case of outward remittances at the prevailing exchange rate. The responsibility assigned to Foreign Remittances section is that it deals with inward as well as outward remittances in and outside the country, both on behalf of the residents and non-residents. The remittances are carried out in the form of cable transfers, mail transfers, demand drafts, travelers' checks, and payment instructions by the letters. The remittances are converted into local currency in case of inward remittances and foreign currency in case of outward remittances at the rate prevailing in the foreign exchange market. Then we shall move on to the third part, import section. Import section has to keep in touch with latest developments in international markets as well as the rules and regulations in force in various centers to take up the import business at right earnest without violating the rules and regulations. Hence, the import section has to take care of the import trade control regulations as well as exchange control regulations before allowing import transactions to be put forth. Import section can be subdivided into import letter of credit both opening and payment, issue of bid guarantees, performance guarantees, guarantees to government agencies. Next, we shall move on to the export section. The export section deals with various exchange operations arising out of export trade. The principal functions of this subsection are advising and confirming letters of credit received from abroad, extending financial assistance to exporters as and when required, acting as an agent for collection on behalf of the clients, negotiation of export bills drawn under letter of credit, facilitating smooth function and operation of international trade, and acting as an authorized channel appointed by Central Banking Authority to receive the export proceeds. Last one, Statistics section. Statistics section collects the sales and purchase figures from various departments along with necessary exchange control forms, tabulates then and submits a periodical report by way of statements and returns to the Exchange Control Department of the Reserve Bank of India under whose authority it operates. This report is also being submitted from time to time in one form or the other to the head office of the concerned bank to enable it to compile the overall position of the foreign exchange, preferably of the bank as a whole. Therefore, the foreign exchange department of a bank has 5 sections: dealers section, foreign remittance section, import section, export section, and statistics section. Now we shall move on to the important aspect of foreign exchange department of a bank, that is the functions. Foreign exchange department of a bank is a highly specialized department in a bank. A wide variety of services are rendered by a foreign exchange department. Broadly, The functions of a foreign exchange department may be classified as financing exports, financing imports, providing remittance facilities, dealing in foreign exchange, and last, furnishing credit information. First one, financing exports. The financial needs of the exporter right from the moment he conceives of the project until he realizes export proceeds are provided by banks. The credit extended to the exporter to procure raw materials, process them, and prepare them for shipment to the importers is known as packing credit or pre-shipment. The credit extended to the exporter after shipment is made is known as post-shipment finance. Finance may be made available by the bank against such entitlements. The advances to the exporters are made at a concessional rate of interest. Therefore, the foreign exchange department of a bank provides financial assistance to the exporters in the form of pre-shipment and post-shipment finance at concessional rate of interest. Second one, financing imports. The importer may be financed by the bank for the imports in the form of cash credit or loan, as the case may be, and against hypothecation or pledge or mortgage of the stem imported. Letter of credit are issued by the bank on behalf of their importer customers. The bank may issue deferred payment guarantees on behalf of the importer for items purchased on terms of payment of price on a long-term basis. The import of goods into India is subject to the import trade policy of the government and exchange control regulations of the central bank of the country. The bank takes care to see that they are adhered to. The foreign exchange department of a bank also finance exporters for export goods and services against hypothecation or pledge or mortgage on par with the regulations of import trade policy of the government and exchange control regulations of the Reserve Bank of India. Third function, remittance facilities. An importer in any country has to pay the overseas exporter. Similarly, a foreign exporter has to receive payment from abroad. The payments into or from abroad can be arranged through any of the credit instruments. Briefly, the instruments may be described: telegraphic transfers (TT), mail transfer (MT), bank draft or demand draft (DD), foreign travelers' checks or bill of exchange. The foreign exchange department of a bank can also arrange for remittance facilities into and from abroad through various modes of transfers. Fourth one, dealing in foreign exchange. With a network of correspondent relationship with banks abroad, a bank in India is in a position to furnish business information. Banks buy and sell foreign exchange from and to the public. To carry out this function, banks have to keep sufficient stock of foreign exchange. These are kept in the form of bank accounts abroad. Banks maintain accounts with banks in important financial centers abroad through which all sales and purchases of foreign exchange are routed. In India, subject to the rules and regulations of the Reserve Bank of India and FEDA of Bank, FEDI, the bank has to quote a rate for the foreign currency to be purchased from and sold to the customer. This section of the department is headed by a dealer. It is the duty of the dealer to see that the bank maintains just adequate balance of each foreign currency and that the rate quoted to the customer is competitive and at the same time profitable to the bank. Fifth one, furnishing credit information. With a network of correspondent relationships with bank abroad, a bank in India is in a position to furnish business information to the exporters and importers in India. The information may relate to the credit report of the prospective seller or buyer, market conditions, exchange control regulations in different countries.